With the One Big Beautiful Bill now signed into law, American tax policy has entered a new era. Beyond the headlines, however, what's the real story for business owners? Well, we're going to get the inside scoop right now from our Chief Investment Office, right here on UBS Trending. Hi, everyone, and thank you so much for joining me. I'm Anthony Pastori. This is UBS Trending. Paul Shao, asset allocation strategist with the Chief Investment Office, is back here in the studio with me. We've certainly, Paul, been talking a lot about the One Big Beautiful Bill, the reconciliation bill that was passed recently. So we know it was certainly an important agenda item for the current administration. And obviously, now that we know what's in the bill, we have seen there have been extensions of the Tax Cuts and Jobs Act from 2017 and other provisions that were in there. I think from this lens, though, I want to get from you, what is the perspective for business owners? Because we've seen a lot about what it's going to do for individual taxpayers. What about the business owner side?
Sure. Maybe I should just give a little context on the bill. So, as you said, a lot of the bill is extending what happened during President Trump's first term in the Tax Cuts and Jobs Act 2017. A lot of those provisions were set to expire either this year or next year. So there's a lot of pressure for lawmakers to extend this because if nothing is done, then this would be a net negative for business owners and individuals because that would expand the tax bill in an already slowing economy. So I think we have a chart up here where you can see some of the goodies that business owners can look forward to, or provisions that would minimize their tax bill, right? For example, the 1999 qualified business income pass-through that has been expanded or been made a little more flexible. The gift or real estate taxes have been extended too. So I think the CBO made an estimate that 99% of people leaving a state will not have to pay taxes on them. Other things like where the administration is focused on expanding domestic investment, like the 100% bonus depreciation, where business owners can realize those tax benefits sooner rather than later. Also expensing R&E expenditures, research and experimenting within the states. So all these things are meant to, one, minimize the tax bill for business owners now, extend what has happened in 2017, and also incentivize domestic manufacturing for the near-term future.
Great, thank you, Paul. And it does sound from what you just saw, what we saw on that chart, that there are a lot of advantages for the business owner segment. When you look at, though, the personal side, when you're looking at individual taxpayers and families, and there are things in there that would impact them. Of course, there's the increases to the SALT deduction for the high tax states like we're sitting in right now in New York. There's eligible deductions for taxes on tips and overtime, things like that. But what do you see as far as the individual taxpayers, or do you think that the benefits really are more for the business-focused group?
Certainly, it's more focused for the business owner group, and that's why we covered this report from a business owner perspective.
Right.
But from an individual perspective, there are some meaningful changes. Like number one is that the tax rates, deductions have remained unchanged from 2017's TCJA, or rather, the tax rates and brackets remain unchanged, and deductions have been slightly increased from the TCJA. So that should be good for a lot of business owners, for individuals. The SALT deduction also has been expanded, which affects people like us. So our tax bill should be lower than initially realized. But also from the individual perspective, I think things when it comes for planning, like how the 529 college accounts have been expanded, Trump accounts have been introduced as well. That's also all meant to affect people from the individual basis, as well as the child tax credit, which I think some Democrats have also been looking forward to expand too. So there are goodies for both business owners as well as individuals, but it's mostly focused on business owners from our perspective.
Okay, great. Thank you, Paul. Something, obviously, there's a whole segment of business owners who are planning their exit strategy, maybe not tomorrow, but maybe in the next year, 2 years, whatever. But we always talk a lot about working with the financial advisors to plan for that strategy as you kind of think about what the future of the business might look like. So from your vantage point as an asset allocation strategist here at UBS, what does this legislation, what does the bill mean for business owners who are thinking about that exit plan? Because, it seems like a lot of the pieces of the bill are helpful for those who are in business now and maybe for the next 10 years. What about those who might be selling their business or exiting their business in the next year to 3 years?
I think the main thing that this bill provides is a lot of tax certainty for people looking to have a liquidity event in the near-term future. Because before this bill was passed, remember, a lot of these provisions were set to expire. So that's a lot of tax uncertainty because in Washington, there was a lot of political will to get this move forward. So folks looking to have a liquidity event in the near term should definitely look at the changes made to estate planning, and that's a little more favorable than it was before. What's happening with the qualified small business stock, that has been made a little more flexible. So for small business owners looking to realize gains on that, they should definitely talk to their financial advisor or tax planner in order to minimize their tax burden.
So great. It's good to know that that's where we are right now. But here's the thing, though. There still is a lot that's unknown, especially when it comes to tariffs, and importantly, the impact that tariffs may have on inflation moving forward.
If we take a look at, I think we have a chart here that looks about inflation rates. So inflation has been coming down for the last couple of years, and we're expecting it to have to increase, accelerate in the next coming quarters and stay higher than the Fed's target. That really impairs the Federal Reserve's ability to cut rates as they said they would. So for business owners, what this means is that interest rates will still be high for the next couple of years, elevated both on the short end and the long end. So just holding cash right now really inhibits you from doing things. So business owners looking to exit in the next year or so, there are a lot of things in the tax bill that have profound consequences. The changes to giving, the expansions and the flexibility to the qualified business stock. Even considering opening other accounts like 529 colleges for their kids, all of these things are things that business owners should be taking advantage of in a more uncertain environment where interest rates will be elevated.
CIO believes the effective tariff rate will end up somewhere around 15%. So given that, because again, there's so much unknown about what could happen in the next few months with these tariff negotiations, how does that impact your thoughts on the business owner?
We're in a period of time where you had disinflation for several years, going back to where the Fed's 2% inflation targets remain a bit higher, and you're seeing this sort of modest tick up in the next couple of quarters as a result of that sort of 15% average tariff increase that we're expecting. So that's harmful for both businesses as well as individuals, and that will slow growth. That's sort of counterbalanced by the benefits experienced by the tax. So that's another reason why I think the administration put this as a priority. But basically, we're in a slowing environment compared to where we were last year. Policy does seem to be a wash, but it does seem that inflationary pressures might be higher in the near term as a result. So taking that all into consideration, I think it puts more pressure on business owners to really minimize their tax bill, but also be aware that interest rates might be a little more elevated relative to our expectations before. And also you see this correlation with the dollar to risk assets. So I remember speaking to one of my colleagues who just made a Euro trip saying that everything's a little more expensive. The dollar is trading at the lowest levels in years. The result of this tariff and tax bill might be more downward pressure on the dollar.
Yeah, I've actually heard that from some friends as well who are traveling in Europe and abroad, and they are saying that as of versus last year and the year before, the dollar's not going quite as far. So it's interesting, and obviously we do see that there are signs of the dollar weakening, and even John Williams, who's the president of the New York Federal Reserve, said he's reluctant to see interest rates be cut. Because he's wary, I should say. He's probably weary as well, but he's wary of the impact that tariffs could have on inflation. So clearly there's a lot that has to be looked at every single day when it comes to the economic data, especially when it comes to inflation. So last question, I want to sum it up all here with you, Paul.
Sure.
Back to the business owners. What does the next maybe 5 to 10 years look like, given what we know is in the bill today and what might not be available to business owners at that point when you're looking 5 to 10 years down the road?
So if we look at the longer term perspective, I talked about the near term benefits that the tax bill might have because it minimizes the tax burden for a lot of businesses and it incentivizes investment. And let's say through 2026, maybe through 2027, growth would have been slower had this tax bill not have passed. So that should be good for businesses. Looking from the 5 to 10 year perspective and even beyond that, it looks like growth might be restrained just because interest rates will be higher than expected. and the deficits will be expanded by around $300 billion per year till 2035. So that adds to the overall debt level and interest expense of this country. So that limits what the government can do when it comes to spending on different programs, except for interest expenses. So down the line, 5 years, 10 years, just servicing the debt might be the federal government's the biggest expense, then defense spending, or it will eclipse defense spending for the next couple of years. So what that means for us is that there's more pressure from future policymakers, whether you're Democratic or Republican, in the 5 to 10 year mark, to raise taxes. So I think for business owners, it behooves them to take advantage of this tax certainty, take a look at what are the best ways to minimize the tax bill and to make those investments that will help in the next 5 to 10 years, because tax policy, at least in my opinion, most likely will change in the long run.
Right. And as we were saying earlier, if you are planning to exit your business in the next 5 to 10 years, make sure you're talking with an advisor, because some of these things that you're talking about could impact what that looks like if you're doing it down the road a little bit. Well, Paul, thank you very much. Good stuff. Lots to get through today, so appreciate you being here.
My pleasure. Thanks for having me.
Thank you, Paul. Again, for more information on everything coming out of the Chief Investment Office, including the pieces that Paul and his team are authoring, make sure that you are checking out our Insights website at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, check out all the content that the studio is pushing on Instagram at UBS Trending. Lots of great stuff there for you. And as always, and as we've said, if you want to continue this conversation, make sure that you're doing so with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.